As of the time that I'm recording this video, the US stock market is facing a pretty big pullback, with many stocks declining more than 10% from their highs, which is in correction territory. And it's not just in the US, when we look at Japan, the Nikkei 225, which is their major index, it's now down 18% from its highs, which is very, very close to being in a bear market. So why are stock markets globally dropping, and what should we do when things like this happen? Let's get to it. So the first reason that I think that stock markets could be dropping is because the US, they've been releasing a lot of bad economic data. And I know this is just the US, but because they are the biggest economy, it does have ripple effects on many other countries as well. The economy is a cycle. It goes up and down, and eventually we will have to get into a recession to sort of reset things. Ever since 2020, we've seen a huge boost in economies globally. So what happens is that the central banks then have to increase interest rates to sort of cool down the economy a bit, and we are starting to see the impacts right now, and maybe a bit too much in the US. So the rate cuts that everyone has been waiting for in the US, it seems like it's finally coming. That should be good news for the stock market, right? But it seems like the fear of a recession is sending stocks lower. So will a rate cut save the stock markets? The answer is we don't know. It did work in 2019 when the Federal Reserve cut interest rates, the stock market did go back up. But in 2019, we didn't have a recession, whereas now it seems like one might be coming. The next reason that I think that stock markets could be dropping is the yen carry trade. I'm talking about the Japanese yen. This one can be a bit more complex, but just try and stay with me because it is pretty interesting. So over the past 20 years, the Bank of Japan, they've had extremely low interest rates. It's been close to 0%. And ever since 2016, interest rates have been negative. So what this means is that to borrow money in Japan, it is extremely cheap. We don't have to pay a lot of interest. And when interest rates are negative, it means that when you borrow money from a bank, they're actually paying you money to borrow. But this is only happening in Japan, right? Only Japan has low interest rates. Why does this impact stocks all around the world? So the thing is, because everything is kind of connected right now, investors all around the world, they notice this, they want to take advantage of it to make some extra money. So what they would do is that they would borrow money from Japanese banks at a very low interest rate to get the Japanese yen, take the Japanese yen, convert it to US dollars, and then buy stuff in US dollars. Things like US government bonds, commodities, as well as US stocks. This is basically something like what I do whenever I get offered a 0% loan. Let's say back then, RGP offered me a 0% loan. Of course, I'm going to take it. I'm going to put it into Versa Cash. Versa Cash pays me 4%. So, I'm basically earning free money. And this is pretty much what all these investors are doing, except it's on a much larger scale. I'm doing it with 10,000 ringgit. These guys, they're doing it in the millions or even billions of dollars. And what's helping these investors even more is that over the last 10-15 years, the Japanese yen has been falling in value against the US dollar. So let's say I borrowed and converted 10 million Japanese yen back in 2011. Based on the exchange rate back then, I would have gotten 130,000 US dollars. If I wanted to repay this 10 million yen loan today, all I have to pay is just $67,000 just because the Japanese yen has dropped by so much. So not only are these investors, borrowing money at such a low interest rate, they're even making extra money because, the Japanese yen has fallen in value by so much compared to the US dollar. But what happens when the Bank of Japan finally decides that enough is enough? It's time to increase interest rates, which also means that the Japanese yen will start to strengthen. And that's basically happening right now. The answer is everyone that is in this trade, they start to panic. So number one is that the interest rate on their Japanese yen loan now is starting to go up. Let's say I borrowed 5 years ago, interest rate was negative 0.5%. Today it's positive 0.25%. So interest is going up, I'll have to pay more. And then because the Japanese yen is strengthening as well, now I have to pay more US dollars to pay off my loan. Back then, maybe let's say I have to pay off the loan with 100,000 US dollars. If the Japanese yen keeps going up, maybe I have to pay 150,000 US dollars. That is a big difference. We're talking, in the millions and in the billions. So what happens is that people who have been in this trade for a very long time maybe decide that now is the time to lock in their profits and get out. And for the newer people who just started taking on this trade, they're starting to get, in the red, they're starting to lose money. So they want to close out this trade as well. And to close out this trade, what do they have to do? First, they have to sell all of the assets that they bought, whether it's US government bonds, commodities, stocks, like I said earlier. They have to sell those and get back the US dollar. They have to convert that into Japanese yen, and then they can pay off their loan. There's no official value as to how much this trade is worth, but many figures, they're estimating it at around $20 trillion, which is huge. Just imagine that amount of money being pulled out from US government bonds, from US stocks and stuff like that. And my suspicion is that most of this money is currently placed in the US. And like I said, when the US goes down, everything else follows as well. And the third and final reason that I think could be causing this stock market drop is that it's just about time. Stock markets, like the economic cycle, it goes up and down. It doesn't just go up in a straight line forever. On average, we will see the stock market drop by 10% every around 1 year and a half, and we will see a 20% correction every 5 years. So this means that maybe we shouldn't panic about all these things. Maybe this is just a normal cycle in the stock market. When we look at the bigger picture, every 20 years or so, we should see a stock market correction of 40%, which seems like a lot, but we did see this in 2020. By the way, if you guys are watching this video and you haven't started your investing journey yet, then now seems like a pretty good time, right? Prices are low, perfect time to start. And you guys are going to need a broker, so you can check out Moomoo. I'll leave the link down in the description below. You guys can sign up with my link, it supports the channel, and you'll also get some very nice sign up rewards once you've deposited some money. So what should we do as investors when things like these happen, and what are some of the things that I'm doing myself? The first thing is, don't panic and don't make any knee-jerk reactions. I know of people who really start to sweat over their investments when the stock market starts to drop. Just remember that, like I said earlier, these things are normal. We should expect over our lifetime to see a lot of these corrections, especially these ones which you can still consider small. The last thing that we want to do in times like these as investors is that we don't want to start panicking and dumping all of our investments when the markets are already down by 10%. That's actually the opposite of what we want to do. So just try to stay calm, try to not even look at your portfolio if you can't handle it. Life will just go on as normal. And this is why it's so important to only invest money that you don't need in the short term. Having said that, now's also a good time for you to start reviewing your portfolio and reassessing your risk level. It's very common that, in a bull market, when everything is just going up forever, that, we go all in. We take a lot of risk because, the returns are really good. When we're in a bull market, risk is not an issue. Every day the stock prices just go up, we just make money. But when a stock market crash like this happens, now we start to panic and maybe you start to realize that you're taking on too much risk. If this is you, don't feel stupid because this happened to me as well back when I just started out investing. In 2020, 2021, the stock market went up pretty much every single day. I went very, very high on risk, and in 2022, when the stock market crashed, I realized that I couldn't take it. It was too much risk. So if you're someone who, you really start to panic or you can't sleep during times like this, seeing your investment portfolio drop down in value every single day, then that is a clear sign that you're taking on too much risk and you need to reassess your investment portfolio. So take your time, reassess, think hard about whether this is happening to you. And if it is, no shame, just readjust your portfolio. But like I said earlier, don't panic, don't overdo it, don't start to think that, I need to sell everything because the stock market is crashing, I cannot take on any risk at all. This could just be your emotions. It's just about finding that balance in terms of how much money you put in the stock market and what kind of stocks you invest in. And the final thing that we should be doing in times like these is to just stick to your plan, especially if you're someone who consistently invests every single month, or if you're someone who practices dollar cost averaging. Bear markets, market corrections, they suck because, our portfolios are going down. Obviously, it sucks. But the best thing about it is that we have an opportunity now to buy the exact same stocks, except it's at a lower price. If you're someone who's below 50 years old, you should actually be pretty happy about this. I know it's hard to be happy seeing your investments drop down in value, but we should be happy because, like I said, the same amount of money that we're investing every single month, we now get more stocks or more shares of the same company. There's a saying that I heard a long time ago: in a bull market, we make money; in a bear market, we get rich. So this is not the time for us to stop investing. In fact, it's the exact opposite. Trust me, don't try and time the bottom. Don't be that guy that's like, oh yes, I know the stock market is down now, but in 6 months' time, the economy is going to be even worse, the stock market is going to be even lower, and then I will invest all of my money. Trust me, don't try and do this. I tried it before. The truth is, no one knows when the bottom will be in. So the best way is for us to just consistently invest every single month and get a good average price. Speaking of that, if any of you are doing, DCA or dollar cost average, the entire purpose of doing this is for us to get a good average price over the long run. But if you only DCA, if you only invest when we're in a bull market when prices are going up, and you stop investing when prices are going down, it means that your average price obviously will be high because you don't want to buy when the stock market is going down. So yeah, just stick to your plan, keep investing like normal and pretend like nothing is happening. An even better scenario is for those of you guys who have a lot of idle cash sitting around, maybe in bank accounts and money market funds that back then you didn't want to invest because the stock market was already so high. Now is a really good time for you guys to deploy that cash. It can feel very scary, maybe you invest some money today, tomorrow you're already down 5%. It can be scary, but over the long run, you will be pretty happy that you decided to invest your money. Imagine buying a truckload of stocks back in 2020 during the stock market crash where, stocks were down 30, 40, even 50%. You would have made so much money by now. Back then, I was a noob. I thought I could, time the market bottom. I thought it was going lower, but it didn't. So that's why I said, don't try and time the bottom, stick to your plan, just consistently invest. I know that I won't be making the same mistake. And that wraps it up. If you guys want to invest, then check out Moomoo. I'll leave the link to sign up down below. Like I said, you'll get some nice rewards for signing up with my link, and it supports the channel. Thanks for watching this video to the end, guys. Give me a huge thumbs up and subscribe to my channel if you haven't already. See you guys in the next one. Peace out.